Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the monthly chart where we're looking for this bull market in the blue wave 1, followed by a bear market in the blue 2, after which we expect continuation to the upside. To get a better idea of when this blue wave 1 might top out, we have to compare the previous wave 1s with one another. And you can see that the yellow wave 1 ended just before the 0.786 fib time. The green wave 1 ended right on top of the 1-to-1 fib time, taken from the low to the high to the low here. So therefore, I also added the 786 and the 1-to-1 on my chart here, giving you a target between March 2025 and October 2025, with the 618 adding a little bit of flexibility, September 2024. Price-wise, the target is then 100k to 180k. Also, again, comparing with the previous bull markets, you can see that the 0.618 trend-based fib extension is very important. Therefore, it is on my chart once again at 105k, but with a little bit of flexibility, adding the 786 as well at 177k. An alternative bullish scenario at the moment would be a wave 1, 2, 1, 2, and then a 1, 2, 3, 4, 5, and then we correct this structure towards the upside, meaning we can expect a bigger bear market. However, the target would be quite similar to the blue wave 1. In the bearish scenario, we have topped out in a bullish 5-wave structure, looking for a bear market to the downside, a flat in a wave 2. The maximum target would be about the 236, just like we had over here with this wave 2, with a target of about 6k, but we do have some important support right above 6k. After this wave 2, we expect continuation to the upside. Preferably, this wave 2 ends after the 0.382 fib time, sitting on the 1st of September 2025. If we then go to the bullish scenario on the weekly time frame, then we have a double 1-2 looking for a 3-4 and then continuation to the upside. Over here, the most common target area for your 4 is the green box 382 to the 05, taken from the low to the high of wave 3, giving you a target area between 57.5k and 53.3k, with the invalidation being 49.3k. As long as this bullish scenario is holding, it has the highest probabilities compared to other bullish scenarios that I have in my folders, sometimes show during live streams, but it is not relevant for this particular video. Now on the bearish side, we then have the flat, and this then matches the big wave 1 that finished on the monthly chart, followed by a flat in the big wave 2 with the max target being 6k, after which we expect continuation to the upside. So what we're looking for here is a 3-wave in A, 3-wave in B, and then a 5-wave C. This then is a regular flat, as B is then rejecting at the 1 to the 105 Fibonacci, taken from the high to the low of A, which is a regular flat target, but a regular flat is actually not a common flat. A common flat is an expanding flat, where wave B, most common target, is the 1.236 to the 1.38 and 98k to 122k. By all means, we want to then see an impulsive structure to the downside, starting on the lower time frames, which at the moment looks like a low probability on the 4-hour chart. The target for your wave C is the 1 to the 1.236, 16.5k, 11.6k, with the 1.618 being an extension target at 6.5k. Best area of support is the golden pocket in confluence with the value area high of this multi-year volume profile between 10 and 9k. If we then zoom into the 4-hour chart, then on the 4-hour chart, a scenario that we've been keeping an eye on is this WXY 3-wave structure, after which we expect continuation to the upside, with inside wave X an expanding flat A, B, C, where preferably, as mentioned before the weekend, wave 3 is going to push to at least 65k, if not higher, moving above the high of this wave A, because a running flat in an A, B, C ending an impulse over here is very rare. And currently we are ranging at about 64k. It is still quite a stretch all the way up to 65k, even for a wave 5. So the fact that price is not really reaching the highs that we like to see does lower the probabilities for this particular scenario, with price coming off the lows, most common target area for wave B, and the wave C towards the upside. So I'm very patient, and the local price action on the lower time frames is going to give us a better indication of of what price wants to do. So therefore, when we then go to the 1 hour chart, the bearish scenario would be a 3-waver in a wave A, B, and then eventually a wave C, ending over here, after which we want to see a move towards the downside impulsively, because if this is an ABC up, we want to see the low taken over here. In a more bullish scenario, we are looking for a wave 1, 2, 3, 4, 5, potentially 4 already in, or another dip to the downside for 4, and then a wave of 5 towards the upside. We do have a little bit of resistance. First of all, we created a double top here. We have high number 1, high number 2, so there's a little bit of liquidity. Then we have a box here, 65.2K, 65.8K, so there's also some resistance above, but then we do expect a bit of a move to the downside. So this move to the upside is running a little bit out of steam. Of course, in the bearish scenario, you're looking for a 3-wave ABC and then a move down continuation. But even in the more bullish scenario, 1, 2, 3, 4, and then a wave 5, or 4 already finished and 5 is in, you do look or start to look for a bit of a retracement towards the downside soon. With regards to the CVD divergences on the 15-minute time frame, we had some bearish CVD divergences here. These already played out because price took the low, and at the moment price is just continuing the range, and we need to wait very patiently to see if new CVD divergences pop up. So if you then look at the different probabilities of the scenarios, then on the monthly time frame, the probabilities are higher for the bullish scenario. On the weekly time frame, same thing. On the 4-hour time frame, I'm very neutral, just observing what price is doing, especially on the 15-minute time frame over here. And the 1 hour, I write 1 hour neutral over here, but what I write at the 15-minute is that the move is running a little bit out of steam, right? We're looking for either a 4-5 territory ending structure of an impulse, or potentially the end of a wave C. So therefore, by all means, we are expecting a bit of a retracement locally, either directly with price moving to the downside where it is right now, or one more high to grab the liquidity of the double top, maybe hitting the resistance, and then look for a bit of a move towards the downside because of the 4-5 territory, 1, 2, 3, 4, 5. Eventually, we expect a bit of a retracement before continuation in the bullish scenario, or we're looking for an impulsive move down. That local move to the downside will give us more information. If the move down is an impulsive structure, right, we're going to be looking for price to take the lows. However, if we can count a corrective structure to the downside in the retracement, we're going to be looking for a bounce and a continuation upwards. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.